In this session, we're talking about what moves the forex market. There are two common factors that moves the forex market, which are the trading sessions and the economic data. So we're going to be going in details. Trading sessions. The forex market can be broken into 5 major trading sessions: the Sydney session, Tokyo session, London session, New York session, the Frankfurt session. Historically, the forex market has 3 peak trading sessions, which are the London, New York, and the Tokyo session, Tokyo or Asian session, which in this topic will be focusing more on the 3 peak trading session. So basically, in this session, we're going to talk more about the 3 most important sessions. That's the most common session you hear traders talk about, which is the London session, New York session, the Tokyo or Asian session. So let's start with Tokyo session. The Tokyo session, sometimes called the Asia session, represents Japan and some of the Asian countries. For traders living in Morica, that's America, the trading day actually begins on Sunday nights at 5 p.m. EST, that's 10 p.m. GMT. However, liquidity doesn't really show up until Tokyo opens a few hours later. The opening of the Tokyo session at 12 a.m. GMT marks the start of the currency trading in Asia. So the Tokyo session, as I said earlier, the trading time is divided into sessions, different sessions, okay? So these sessions now are meant to fit in your local time scenario. So the Tokyo session are mostly for those that are in the Asian countries. Those that are in the Asian countries or Japan. That's what I'm trying to say. So someone in the Asian country will not be waking up at London session to trade because it's not going to fit his time schedule. Neither will he be waking up by New York session to trade. It's not going to fit his or her time schedule. So he's going to wait for the Asian session, which will perfectly fit his or her time schedule and trade by then. Alright? The London session. The London session represents the United Kingdom and other countries within it. Usually opens by 7 a.m. GMT and closes by 4 p.m. So someone that's in the United Kingdom cannot be trading the Asian session. Although you can, but it's not advisable because by that time, traders in the United Kingdom are meant to be sleeping. So that's the period you need to rest. So you won't be trading your time to trade. As a trader, the session is there to guide you. You're not supposed to spend like 24 hours a day on the chart. That's the essence of trading, is for you not to be spending 24 hours a day on a chart, for you to create more time. Generally, when trading, you should spend at most 3 to 5 hours a day, and that should be enough. Okay, so the session will help you to time yourself. Okay, to put yourself in a time zone, to time yourself within a specific period. At this period of time, this is when I want to trade. Either I want to trade in London session, I want to trade New York session, I want to trade Asian session. So the London session represents the United Kingdom and the country within it. Note when this time opens and when it closes, because when 2 sessions tends to be open is when the market seems to experience more volatility. We're talking about that as we go into course. So usually open by 7 a.m. GMT and close by 4 p.m. GMT. Just when the Asian market participants are starting to wrapping up their trading day, their European counterparts are just beginning their day. So when the Asians are like, okay, I'm done trading for the day, that's when the European counterparts are just beginning their day. While there are several financial centers all around Europe, it is London the market participants keep their eyes on. Alright? There are different financial centers around Europe, but most people in the United Kingdoms and the European countries, they prefer to trade London sessions. Okay? All these sessions are going to work according to your time. So for example, I'm working in GMT plus 1. So the best session for me to trade will be the London session because that's when I'm getting off bed around 8 a.m. Okay, so getting off bed around 7 a.m., 6:30 a.m. and hopping onto the chat by 8 a.m. So me trading by 5 p.m., which is the Asian session, is not going to work for me. Do you understand what I'm trying to say? Good. Moving on to the next session, which is the New York session. The New York session represents the North America region. Alright, as European traders are getting back from their lunch breaks, the US session begins at 8 a.m. EST, which is 12 p.m. GMT and 1 p.m. GMT plus 1. As traders start rolling into the office, just like Asia and Europe, the US session has one major financial center that the market keeps their eyes on, which is the New York session. Now, the New York session is for the United States. the United States and countries that are in that time zone. You've noticed most traders be like, okay, I only trade one session. Now, the reason they trade just one session is like that's what suits their time zone. For a trader that your day that has GMT plus one, you can either trade New York session, or you can trade the London session. Trading the Tokyo session will be difficult because at that time you're supposed to be sleeping. Alright, so the New York session opens when traders are coming back from their lunch break at 12 p.m. or 1 p.m. That's when the New York session opens. 8 a.m. EST. So someone that is in the EST time zone will be watching out more for the New York session instead of the London session. Someone that is in EST time zone will be watching out more for the New York session. Okay? What is the best time to trade? It's best to trade during the middle of the week, since this is when most actions happen. The middle of the week is like Tuesdays, Wednesdays, and Thursdays. On Monday, traders are just getting up, they're just starting the week, so most traders would prefer to stay away from the market because they want to see what the market wants to produce for the week. They want to see the direction the market will seem to move in. So on Monday, most traders usually stay away from the market. Okay, then on Tuesday, by Monday, as at Monday, the market already given an intention. The market probably has given like a particular signal or like, okay, I'm going to be buying. So on Tuesday, traders will be trading on what they have seen on Monday. Now on Friday, the reason most traders don't trade on Friday is because they don't want to keep a trade running over the weekend. Because Friday is the end of the trading day in Forex. Friday is the last day out of our 5 trading days in Forex. Friday is the last day. So most traders would prefer not to keep their trade over the weekend, especially day traders. That's why they won't trade on Fridays. Okay, so the best time to trade the Forex market are Tuesdays, Wednesdays, and Thursdays. Most traders don't trade on Monday because they feel it's just the starting of the week. Let me see. It just gives me a head of what to expect in subsequent days to come. Alright? What are the worst times to trade? The worst time to trade are Sundays. Everyone is sleeping or enjoying their weekend. Sundays and Saturdays, those are the worst times to trade. Everyone, because at that period of time, people are sleeping or enjoying their weekend with their family. They're taking their family out on picnics, vacations, and the rest on Sundays. That's the weekend. On Friday, liquidity dies down during the later part of the US session. That's towards the ending of Friday session, most traders will be seeming to close off their positions because the session is about to come to an end and it's the weekend. So most traders will always seem to close their position, making the market to have low liquidity and low volume. Alright, holidays like the Christmas holidays and the New Year event, everybody's taking a break. So why then are you trading? During those periods of time, the market is still on, but it's gonna be having low liquidity. It's gonna have low liquidity and low volume. It's holidays, everyone is taking their break. Okay. Major news events by NFP and FOMC. Most traders tend to avoid major news events because you don't want to get wiped out. That's, you don't want to wipe your account. During that news events, the market seems to experience spillage. They're going to be having higher spreads. Market tends to have high spread and high spillage, so probably making your trade not to close where you want it to be closed or to be placed where you want it to be placed. What is spillage? Spillage is if I want to place a trade at 1.2, spillage will cause the trade to place at probably 1.5. If your stop loss is meant to be at 1.0 or 0.9, because of spillage now, something that's meant to be 2 pips become a 3 to 4 pips stop loss. And most of the time when the market tends to experience spillage, when spillage shows in the market, your broker will not be as fast enough to close trades out. So thereby, either the market gives you higher losses or higher profits. It's good to be in the other way. It's best to even avoid trading on news events so you don't end up losing your account. News events are the major time because at that period of time, the market tends to have very high volatility and high liquidity. The market can move 50 pips in seconds. Can move 50, 80 pips in seconds. I want to explain what pips is. So during that period of time, you always tend to avoid trading during major news events. And most importantly, when you just broke up with your partner because you choose Forex trading over him or her, or when you're having emotional imbalance. When your partner like says, okay, you have been spending much time on the forex market, I don't think you have enough time for me. So most of the times they'll break up with you and be like, okay, I think I'm done with this shit. You're not supposed to go into the market because you are not emotionally stable. Whenever you are trading forex, your emotions need to be intact. So you won't just jump into the market, my partner break up, you won't be able to either make profit. Most decisions you make in the market will be based on your emotion. So it's advisable you wait until the next London session for it to trade. Okay? Now we're going to talk about important economic data that affects the forex market. Important economic data that affects the forex market. Number one, we have the macroeconomic statistics such as inflation have the greatest impact on the forex market. Macroeconomic statistics such as inflation has the greatest impact on the forex market. If a country or a currency seems to be inflating, it always have a great effect on the market, on that particular pair, any pair that associated with that currency. For example, if USD is inflating, it's going to affect like Euro USD. So that's one of the factors that affect the forex market. The next one is stock, bond, commodities, and other capital markets also have strong influence on exchange rates. The stocks, bond, and also commodities and other capital markets have strong influence on exchange rate. It affects the exchange rates. Okay? International trade numbers such as deficits and surpluses play a vital role in the forex market. The international trade numbers affect the forex market and economic data that affects the forex market. Now, the political news can also be seen as important for forex traders, especially when unexpected outcomes occur. Now, if you notice during the US election, they had every update that comes out always affects the market. Example, when there was COVID outbreak all over the world, you could probably see the market was probably in a very strong bearish momentum because it's a bad news. And because there's COVID outbreak, most people were staying indoors, so there were no spending done at that time. The supply and demand were not balanced. So during that period of time, the political news of a country affects the currency pair. For example, if you want to trade USD during a political election is coming up, you have to first of all check the news of USD before hopping to the market, because at any point in time they can be like, okay, Trump seems to be losing and Biden seems to be winning. Any of those things can happen and it's going to affect the currency. Okay? Countries and their central bank. US Federal Reserve System is the central bank of the United States. European Central Banks, ECB, is for Eurozones. The Bank of England, BOE, United Kingdom. The Bank of Japan, BOJ, is the Bank of Japan, is the Central Bank of Japan. The Bank of Canada, BOC, is Central Bank of Canada. Reserve Bank of Australia, RBA, is Central Bank of Australia. The Swiss National Bank, SNB, is Central Bank of Switzerland. So, as a trader, you need to be checking the news updates from these various banks, because the central banks will affect the currency. If, for example, Fed releases the news and the news was like, okay, I think we are starting to print more dollar. Fed says we are going to be printing more dollars at this particular month. We printed more dollar. What do you expect? Because there's more dollar than there's like more supply of dollar than demand, the currency tends to lose more value. Do you understand? So all those like the information of the central bank is very important. You need to be checking out the news. The BOE now for the FED, any related to FED goes for United States, and the currency United States uses is the US dollar. That's USD. So whenever you want to trade USD, all you have to do is go to the website Forex Factory or Bloomberg and search for news concerning FED. Now for Eurozone, your central bank is European Central Bank, which is ECB. All you have to do before trading, you want to trade euro, you go onto Forex Factory or Bloomberg and search for news concerning ECB news. Now in the Bank of England, United Kingdom, their currency is GBP. So before you want to trade anything related to GBP, what you have to do, you have to go and search for any news. Is there any did the Bank of England release any news today? That's gonna tend to affect how the market is gonna move. So for the Japan, their currency is the yen. That's Japanese yen. What you have to do, if you want to trade anything related to Japanese yen, you have to go to the site Forex Factory or Bloomberg and say, has BOJ released any news? For Canada, we have the Canadian dollar. What you have to do is same thing. You have to go to the Forex Factory or Bloomberg and get update on BOC. Has BOC released any news? Whatever news they release is going to affect the Forex market. Okay, so in as much as the trading sessions affects the Forex market, moves the Forex market, also the news of different countries, political news and news from the central banks affects the market. Okay, so with that being said, we have come to the end of this session. We're gonna move on to the next session. Thank you.